But let's discuss some of the other companies. Let's welcome on board Sunil Bohra, the ED and Group CFO at Minda Industries, joining us on the show right now. Sunil, hi, morning. Despite weak industry sales, you've been able to outperform your peers in the quarter gone by. Would you attribute it to the strong cost control or measures that you undertook, or would it be growth in new products?
It's a mix of both. You are right that there have been series of actions which the company has been taking in order to improve its kit value. So in the last quarter, we have seen revenue addition from a couple of businesses which has started or added in last 12 months. One of them was Minda Catalec and another was ECS in Germany. Plus there has been some value add from our existing products. So that has withheld the sharp fall which we have seen across the industry. So on a half-year basis, our revenue is lower, roughly around 5% compared to a industry drop from two-wheeler is different, three is different, four is different, CV is different, ranging from 15 to somewhere around 30%. So overall, in terms of revenue, we have been able to sort of do relatively better, while there is a room for growth in coming months, where we are currently working to add few more products to our kitty. So that should help sustain the momentum of outperforming the sector in medium term in terms of top line. In terms of margin, yes, you are right that we have been able to maintain our EBITDA margins quarter on quarter, even compared to the last year. We are almost flattish despite the headwinds in terms of revenue growth. We have been taking strong actions in terms of cost optimizations, cost controls, which have yielded results, which is visible in terms of our margin. So yeah, I think things have worked the way we have planned.
Could you also tell us what's been the order inflow for the newly introduced products like alloy wheels, RPAs, LEDs, controllers, etc.? What's the kind of potential that you foresee?
So potential is big. That's what I think we have been banking on these products, which we call as sunrise products. In terms of new additions, couple of new launches which happened in the last month, we have got like Maruti Espresso, etc. We have got few orders there, lamps, wheels, etc. And we continue to add products order book for whatever the new order or newer launches is there. But in terms of these products which you just said, which is alloy wheel or controllers or lamps, etc., we are continuously working in terms of adding the premiumization factor, like in terms of LED and all. While if you see the lights again, which is directly correlated to the industry volumes, we have again been able to do better. Not only because of premiumization, somewhere we have also improved our share of business. And there are some businesses like controllers and alloy wheels, which we call sunrise businesses. So controllers plant which currently is under construction, so there is not much of the revenue in this quarter from controllers. And also from alloy wheel for two-wheeler, the plant is under construction. So we should see some revenue addition from both these products in the first half of next calendar year. Controller business should start somewhere in next quarter, and the alloy wheel for two-wheelers should start operations in the first quarter of the next fiscal. So these two products definitely will provide that improvement in enhancement in kit value from the next calendar year onward. In addition to that, as you know, that we are in process of completion of acquisition of Harita. That should also get consummated by end of this fiscal, actually by March or so. So that also will start adding to our top line and bottom line.
Okay, fair enough. So what's the margin picture then? Do you see higher margins as well? As you said, it will contribute to both the top line and bottom line. And in terms of the order book for BS6 vehicles, are you still facing any challenges on that front in terms of low capacity utilization?
No, definitely. The industry-wise, the capacity utilization is less. So if the volumes are down, it directly correlates to our production capacities as well. So capacity utilization definitely is on the lower side, while the existing plants, the old plants, what we call, the capacity utilization is somewhere around 70%. But the newer plants which we have put up in last 12 to 18 months, there the capacity utilization is relatively low. I would say something around 50 to 55%, because we have put up like 6 plants in last 12 to 18 months. So their capacity utilization is less. But those plants were put in the expectation of hope of growth. But suddenly we all know that what happened from last October onwards. and that is why we have not been able to utilize our capacity fully. You said in terms of margins going forward, it's very difficult to say what kind of margins will be there for future, but I think our current guidance is we should be able to maintain the range of around 12%, to which we have successfully achieved for last year. We have moved our margin profile from a single digit of 7-8% to 12%, which in our industry is, I would say, somewhere in the top quartile. And we would like to consolidate in that margin range, despite we are adding fewer products, because you'll appreciate wherever we add new products, the margin is relatively lower in the initial years, and as you ramp up, the margins do improve. So if we are able to maintain this margin despite adding fewer products, I think that will be a good achievement, A. In terms of B, which is the acquisition of Harita, there the margins are actually on a single digit. So that may be a little bit of margin dilutive. But overall, in terms of what we call the fixed asset turnover ratio, the Harita acquisition is very attractive. And we are confident that in medium term, it will be able to deliver the ROCE which we are able to deliver for our existing businesses. So overall, things look better from medium term perspective.
Okay. What's the increase in content per vehicle, that's been seen? Any light on new order wins as well?
Yeah, in terms of content per vehicle, normally we give our kit value and we do that exercise on an annual basis. So if you see, in last year, we have added kit value ranging from around 7-8% to 13%, depends on the vehicle, category of the vehicle, or two-wheeler versus four-wheeler. And we are on that journey, and we are confident that in this year and next year, we will again see a significant bump up in our kit value, primarily because of 3-4 products which you just spoke about, which currently we don't have operational. So these things will help continue our momentum in terms of addition of kit value, which we believe that expect that in next 6 to 12 months, it should be around in between, ranging from 5 to 6% to around 10 to 12%, depending on whether it's four-wheeler or two-wheeler. Because of addition of two-wheeler alloy wheel, we expect a big kit value enhancement in two-wheeler and compared to four-wheeler. But four-wheeler, again, we are adding products like sensors, controllers, etc. There also we'll see some improvement in kit value, but relatively in next 12 months, two-wheeler kit value will see a better growth compared to a four-wheeler.
Sunil, great to have you on the show. Thank you so much for taking the time out and speaking with us today.